Well, good evening, folks. So I was trying to do a recording, but for whatever reason, Camtasia was acting up. It was giving me errors on the two recordings I did, so I wasted an hour and 20 minutes of my time trying to record something. So I don't have the time to do a Twitter space tonight, so I'm tired, and I'm going to go over this here, so that way it'll be hopefully enough. All right, so real quick, I want to get this out of the way. I mentioned on Friday that there would be several other levels on the upside that I was interested in should we have continued up. And let me take you real quick over to here. I promise I won't try to be too long tonight. I know I usually say that kind of stuff and it becomes like a field trip. But we had this old high that was 4090.75. And then we had the next level on the upside was the consequent encroachment of the candle. This is daily chart, December 13th. So that's this level here. So between that, this level here, this high, and that consequent encroachment, if you put a Fibonacci on to measure that level to here and here, it's 4104.25. That's this level I had over there. And then from that point, we have this level halfway, and then the consequent encroachment level up there. So what happens after that is we have the low, the midpoint, the high. So from high, we have this next level here that's 25%, 50%, 75%, and terminus. So that's what these other levels were for, okay? And obviously, if it went over your head, it's not important anyway, because you'll probably see more of this stuff throughout this year. But I know some of you are looking for that to be explained, and you can see that being explained here. All right, and on the 15-minute time frame, this morning, if you haven't looked at my tweets for today, January 30th, 2023, around 8:15, 8:25, in that vicinity, New York local time, January 30th, 2023, I posted a pre-market analysis video where I outlined this very thing here. Okay, the new week opening gap. I'm going to spare you the 2 minutes or so that I did that. Oh, nice guy, see that? I'm going to drag you through 45 minutes of other stuff, right? No. But go through the tweets this morning, and you'll see that all of the things I'm outlining here were before the fact. So the market was trading down here around 40.52 vicinity in that area. And I mentioned that if you look at the market with just electronic trading hours only, you miss the gaps like this up in here. So it's important for you to know where they are, and the way you see them is you use regular trading hours and electronic trading hours. That's how you find them, okay? And I'll walk you through a procedure like I did this morning when it's important to use. Sometimes it's not important to use them, okay? And you'll see those procedures and processes that I go through. Doesn't mean I'm going to be right all the time, but I think everybody that's been paying attention this year, I got your attention, don't I? So all I'm asking is just come every day, show up with a notepad, and you'll learn more things. But we have the gap, which we traded up into later on in the morning, and this level here is the order block from the daily chart. So let me go back and show you what that is. If you look at this candle's high right here, the date is the 25th. So if you drop a horizontal ray on that candle's high, the high being 4040.50, that is the order block. Okay, so it's also the low of the fair value gap between this candle's low on the 27th, Friday, and last Wednesday's high. That one single candle on Thursday, that's your fair value gap. So we'll drop down into 15-minute time frame again. So you can see how we had that reaction off of the order block, on the daily chart. It only went down 1/4 of a point below it. What's the low of that candle? I'm sorry, I misspoke. It's a 1/2 a point. The low was 4040 and the level was 4040.50. So half a point variance, then reaction sent it higher, trading up into that level here. Now right in here is where I was tweeting and talking about how the pre-market is likely to see us return back to that new week opening gap. So watch that small little video. It's on my Twitter feed. It'll show you how to map this very specific range out and what its use is meant to help you throughout the trading day. So we're going to drop down into a 5-minute chart. And this is the fair value gap I mentioned this morning. I said that's important. We'll use it as an upside draw. I had these levels here annotated in the chart. They were just made darker so that way you can see it, because once I posted it on Twitter, it's a little faint, but you'll clearly see that they're there. That's a 5-minute fair value gap. And if we're bullish and we're expecting price to get up to here, once it gets above it, we like to look for these levels here to act as what? Support. Okay. And right away you can see there's a whole lot of business going on here, and I'll zoom into a lower time frame in a second. But the premise was I wanted to see it go higher. And I outlined all that this morning. I walked you through the logic as to why I think it's that way. And we didn't have any real economic news to really base a whole lot of this on, except for this is what I refer to as a soft bias. A soft bias is where only technicals are used. There's no injection of volatility. There's no calendar event, no big 8:30 news driver. So you kind of like have to wait until we get closer to that 9:30 equities opening at New York time. Okay, so I'll drop into the 1-minute chart and get this over for you, because I know it's probably taking too long for some of you younger folks. Get to the point, ICT. The point is you're in the right place. All right, so this low here, right here and here, notice those are relative equal lows. Well, why didn't it go below that? It doesn't need to. Why did you have this fair value gap noted here? Because it took out this short-term high. So this short-term high becomes a shift in market structure that's bullish. Well, why should I expect that? Because I outlined it this morning that we were likely to go back to that new week opening gap. The stuff that's up here. Okay, so that's the draw on liquidity. That's the part I'm going to be teaching you this year live. So that way you can see it, understand it, know what it's like to do it on your own. And you'll have plenty of experience doing it. And you'll be able to determine where the market's going to go to next. Because if you get that figured out, that's 80% of the battle right away. So then you can go in and look at all these little intricate things inside of price action. So we have a low that was taken out here. We don't need this low taken out. Why? Because it shifts above this low. This high. Market structure is now bullish. Does it leave a fair value gap? Yes. Trades down to halfway, which is consequent encroachment of the gap. Some of you are new. It's going to go right over your head. These terms, I promise you, I'm talking about all these things continuously and explaining what they are. 3 consecutive down closed candles is a bullish order block, which is also midpoint of that gap. Gap is defined by this candle's low and this candle's high. The one single candle in the middle, that's the fair value gap. Market rallies, creates a small little volume imbalance in here. I like that. Here is this down closed candle, which is a propulsion block. Okay, propulsion block is a down closed candle that approaches or goes into a previous order block that's lower, which is what we have here. I like to see nothing more than half of that candle be traded to, and we see that occurring here. Look at the bodies. Yes, we get a wick, but look at the bodies expecting return back to this midpoint. Sure, but look at the precision there. That is perfect. That's algorithmic. When you look at how I look at price this year, you're never going to look at a candlestick chart ever again the same way. You're not even going to reach for a bull flag. You're not going to look for a head and shoulders pattern. You're never going to reach for a diagonal trend line. Those things are going to be cast aside. And you're going to focus in on the open, high, low, and close. That's all the algorithm is working with, and it's using time. Okay, so the time of day here, we're approaching the equities opening. We have relative equal highs here. What's above that? Buy side liquidity. And more specifically, those orange levels are a 5-minute fair value gap. We're bullish. We want to see it trade through that. So it'll act as a speed bump, but it's not a barrier or a brick wall. So you can see it's happening here. It stops, it consolidates, rallies up above it, and comes right back down into what? This candle right here is a breaker. We have a low, high, lower low. So sell side below these lows here has been taken out. It's been absorbed, and then we went higher. Find the breaker, which is the up close candle, inside the swing high between the low and the lower low. All of this is taught on my channel. Find the midpoint of that. That is mean threshold. It trades down into it here, and I'm accumulating long positions here within this volume imbalance as well. This is what you watch me do in the morning recording, where I was accumulating my long positions here, talking about how I can go down to consequent encroachment, midpoint here, that's permissible, and then we would see it rally up into this shaded area here. There's my executions, and then later in the day I did the move into the target I actually called in pre-market analysis. So we'll take this off for a second so you can see what I'm referring to going forward. So the market does in fact vault higher. Look at the bodies respecting the fair value gap I mentioned ahead of time this morning. Comes back down in. This move here is a buy side imbalance, sell side inefficiency. That is not a liquidity void. It gets called that. It's not. This right here is a liquidity void. Let me take that off for a second. See, there's a gap between this candle's high and closing price being the same thing, and this candle's low and its opening, same thing. There's no price touching or overlapping between these two price points. That is a volume. I'm sorry, that is a liquidity void. A volume imbalance is my range between where one candle's body and another candle's body doesn't touch, but there are wicks that overlap in between. So there's the difference between that volume imbalance and real liquidity void. They're mine. You're not going to find them in books until I mention them, obviously. Buy side imbalance, sell side inefficiency here. So it's inefficient in what? Sell side. So you're going to be waiting for it to come back down. How far can it come back down? Midpoint, which is consequent encroachment. So buy side imbalance, sell side inefficiency, consequent encroachment. Already, you guys out there that want crossovers and moving averages are already thinking this is too complex. It's not complex. It's just you don't know the language yet. All we're doing is looking for areas where the market's going to pull back into an inefficiency or run stops and go up to a level to fill in an inefficiency or run stops. That's it. And the only way you have to worry about anything is first determining what's the bias. That's where you determine, is it likely to go higher or is it likely to go lower? And then you just look for two different parameters. One or the other, they both don't exist. And then you simply read the tape. You watch it go forward. The market rallies up, buy side imbalance, sell side inefficiency again, much like this one here. Trades down to the last candle here, which is a bullish order block there perfectly. What's the opening price on that candle? 405.8.50. What's the low on this candle right here? 405.8.50. Perfect. You can't improve upon it. I know, it's wonderful. Rallies again. Buy side imbalance, sell side inefficiency. What's this candle here? Bullish order block. What's the high of that candle right there? 4061.75. Now here's where it gets a little tricky. We have a gap here, that shaded area. It can return back to consequent encroachment, midpoint, or all the way down to the bottom. Look where the bodies stop. The damage is done by the wicks, but the narrative is told to you by the bodies. What's the high of that candle here? 4061.75. What's the close of that candle? 4061.75. Perfect. That's algorithmic. The market rallies. Gotta scrunch this up. It's a little weird looking. Rallies all the way up into here. And what's it trading into that right there? Well, let's scrub back and do some further investigation. I know. ICT, if you just do this trick I know on trading you'll be able to go back and do this and do that. I know. I'm an old dinosaur. I like to do things my own stubborn way. All right, so between this candle and this candle here, which doesn't look all that obvious right now, but let me go back up to a 5-minute just to communicate what I want to show you here. All right, right in here, if you look at how we went back up into Friday's close, which is this here, 84 even, See that closing price? 40840. And then we opened on Sunday right down here. So that's what I'm giving you extra value here. I'm saving some of you the time to go look at that Twitter. This is the opening gap on Sunday. We went up to it, filled it in, came back down. Now we are what? We have redelivered to this range, the range between Friday's close and Sunday's opening. We delivered what? Buy side and then sell side. Is that a balanced price range yet? No. It's got to leave it. It rallies back up to where? Consequent encroachment, midpoint. Then it leaves it. Now, when it leaves it, it does so here. What does it leave in its wake? That fair value gap right there. It's the only one in its kind. So that level is important. I said this morning in the pre-market analysis that it can return back to this fair value gap, the weekly gap opening, and it does not need to come back to Friday's close or up here. Why? Why did I say that? Because of what I just outlined here. It opened here on Sunday, traded back up to Friday's close, delivered what? Buy side, then sell side. Then halfway, it fails to go higher, and then leaves the range. The only thing that's inefficient at this point now is that small little fair value gap right there. Now, scrub on over here, and look how perfect that is. But where did you get out at, ICT? I didn't get a perfect exit. This is what I have a struggle with my exits. That's my weak point of my trading. So you can see the high was 40.78 even, and I only got out at 40.76 1/4. And I wasn't even able to time it where I can get out in between the gap. So, I mean, it's still better than, 5 handles again. So 2 times, 5 handles, 10 handles, between 2 points, to a level I was calling for, to a bias based on everything technical that I've outlined. And everything was just beautiful today. Beautiful. And later in the day, a little bit of a messy move, but I want to pull this out and I'll close it and take the executions off. I apologize. I'm usually much more organized and I just want to get through it. I'm kind of tired. So we had this low here prior to this run up. So what's going to be below that low? Sell side liquidity. Okay. Why? Because we had that used off of what? The daily order block. Remember, this is the low of the daily fair value gap. And I know I'm saying these things and it's zipping by the new viewers here. Go back and listen to the video again. It won't be that long. And listen to what I'm outlining on that daily chart. What this level is. Okay. First time it hits it, it rallies away and goes to the level that I outlined this morning. Perfectly. Now, at this moment, right here, other retail traders would think it's probably going to keep going higher. I'm not interested in seeing going higher. The market starts to break down and we get below that fair value gap on the 5-minute chart. Now it's going to act as resistance. We wick through it a little bit into an order block. Does it break lower again? Yes, it does. Does the body start respecting that fair value gap in here? It does. So the next time it returns, if it can return to it, what can we reasonably expect? The low and then the half point consequent encroachment. Look at the bodies of the candle. It's half of this range. You're trying to tell me, okay? You're trying to tell me that retail traders all came together. The planets aligned and everything, kumbaya, they match up exactly where I'm telling you the algorithm's going to have turning points. Get out of here. No way. Absolutely not. There's much more deeper things going on in price action besides your bull flags and your head and shoulders patterns and Elliott wave and harmonic patterns. I'm sorry, but there's a real technical science to this. As much as the Goldman boys don't like to admit it, this is really what's going on. It's all algorithmic. It's absolutely controlled. 100%. Price breaks lower. What's it creating here? Fair value gap. Rallies. Right into it here. What time of day? 1:15. It's a little too early for my liking. 1:20, 1:25, 1:30. That's usually when I'm expecting the afternoon move. Here is 2 o'clock. That's a more favorable time of day. And we have a balanced price range where we have one rally up and then one rally to the downside. It's this small little area in here. It's a fair value gap on both sides. So it's going to have a hard time going through that. And that's what you're seeing here. Where's the sell side? Below these relative equal lows. and then below that low there. And I was in another YouTuber who I like and I'm supporting. So don't take this out of context, Patrick. But Patrick Weiland, he has a live stream. He calls his own moves. He's doing it out there every single day. And he's another YouTuber I like. And you're welcome to go check his channel out. Please don't go there and talk about me, because that's not what this is about. You know, he's putting his time and energy into trying to show you how to do this stuff his way, and that's cool. But I posted that 40.45 was where I was looking for the afternoon. And you know the fair value gap show here, where if it's below it, it's going to be acting as what? Resistance. So when it hits the 40.58 level, starts to break down, we're going to be looking for 40.45. And 40.45 was nailed here, ran up into a fair value gap, broke down, relative equal lows. Balanced price range in here. Trust me, you'll hear more about this stuff all year long. It'll make more sense to you seeing it live, called, explained. That way you can see it. If I can't do it live, okay, it's going to be of no use to you. That's the whole reason why I come out here this year, so that way you can see it. I can walk you through it, give you a better understanding. That way you can see there's no cherry picking, okay? I mean, I walked the whole day out this morning, before the market even started trading. So balanced price range here, and then it's going to attack that low right there. Why should it be attacking that low? Because this is where the majority of the move this morning started, and traders on a fund level are going to have their orders down here. What kind of orders? Sell stops. They're not in the habit of running up and trailing their stop loss, because they're trying to catch more sizable moves. Well, what fund manager is going to be holding it? You'd be surprised how a lot of them don't know what the hell they're doing. Just because they're running a fund doesn't mean they're profitable. Just because they have a fund doesn't mean they know what to do. So, but they have a lot of money behind them. And that's where the market's going to go, where the money is. Where are the orders? Not the harmonic crab patterns, okay? Not these Elliott wave counts. You don't need to count anything. Just count your profits. That's all you got to worry about. Show up every single day. Show up every single day with a notepad. And I promise you, I will deposit more understanding in you than you'll get from any other books out there that talks about technical analysis. And I promise I'm going to do it in such a way where it will be fun. It'll be engaging. You'll have drills, homework that you'll want to do, not like it was when you were in school. And you'll feel better about what you've learned at the end of the week. It'll be so much more understanding that you don't even really understand what you're going to see. But I know, and I can't wait to share it with you. So hopefully you found something in this insightful. Hopefully I didn't run through it too quick. I know I'm usually long-winded and go into a lot more detail, but I'm tired. So I got to get some rest. Otherwise I won't be able to assault you on Twitter tomorrow. Until next time.